Hey everyone, welcome back to Nadlan Forum Podcast Daily. I'm Ruby Sturt, back for another round with Lior, and today we're diving right into August's existing home sales data. Lior, it's wild how steady things are. 4 million existing homes sold in August, right? Just a tiny 0.2% slip from July, but that's still 1.8% above last year.
Yeah, with everything that's happening with rates, it feels almost, surprising. People forget these closing numbers. They're really a peek back in time. They reflect deals that were made, maybe in June or July, when mortgage rates were about 0.5% higher than what we're seeing now. So if you're holding out for the market to react to the lower rates that kicked in from September, that'll show up in the data later on.
Totally. It's a lag, right? Actually, it reminds me, just last month I was helping a friend in Melbourne who was stressing about their rate lock timing. She kept asking, Ruby, if rates drop next week, will it even matter for my place? And honestly, it's the same story here. You strike a deal when rates are high, the paperwork churns on, and then the headlines catch up afterwards. Little real-world delay that messes with everyone's nerves.
That's the thing. We feel the rate changes almost instantly in our psychology. But the contracts, they move at the pace of bank paperwork. And like we've been saying in some past episodes, especially when rates are shifting rapidly, it creates this weird waiting game for buyers, sellers, everyone. So looking at these August numbers, I wouldn't panic about the slight dip. Given how high rates were, the market's still showing this odd kind of resilience.
Yeah, and it's not just about the rate sticker price either. It changes people's whole calculus. Do I jump in now or wait thinking it'll get better and then maybe I miss my window? Loads of people still want to buy or need to, but they're kind of playing chicken with the market. Anyway, the big question's always who's actually managing to make a move in these conditions.
And that brings us right to the split in the market. Kind of dramatic this year. The sales of 1 million plus homes jumped 8% year over year, while the under $100,000 bracket actually dropped more than 10%. So, luxury buyers are still out there, busy as ever.
There's a clear divide, yeah. Listening to folks on the upper end, it's like they're living in a parallel universe. Stock market's strong, their home values keep stacking up, and they're trading up or buying second homes like the high rates are an afterthought.
The rest? It's getting harder. Lower income, first-time buyers, they're squeezed from both ends. Inventory is tight, and even those lower-priced listings, they get snapped up so fast, if they exist at all.
Lawrence Yun from NAR summed it up. Record high housing wealth and stock gains are letting people trade up, but there just aren't enough affordable homes to meet demand for lower income and first-time buyers. And with that, I know you had a Tel Aviv story, Lior, that fits here.
Yeah, honestly, it's déjà vu for me. In Tel Aviv, you see the same thing. Luxury apartments still moving, foreigners or local high net worth buyers coming in cash, while ordinary families, first-timers, they're basically locked out. The gap is wider than ever. And here in the US, it's not just a one-city thing. It's across the board, as the numbers show. Entry-level buyers gotta fight not just price, but supply and even competition from cash investors.
And that cash buyer trend is creeping up again here too. A big 28% of US existing home sales were cash in August. No wonder it feels impossible for someone trying to get a starter home with a traditional mortgage. It's just brutal. But I guess that makes the market that much more sensitive to, any shifts in affordability or policy.
So, one place those affordability shifts play out big time is regional trends. The Midwest is kind of the unexpected hero here. Sales are strongest there, and it's no mystery why. Median prices in the Midwest are about 22% under the national median. That helps people actually buy, especially now as wallets get squeezed.
And on the flip side, the Northeast and West Coast, they're pretty sluggish, especially for first-time buyers. Prices are still high. There's not enough decent inventory below the median. So if you're looking for an entry point, you kind of have to look where the numbers work, not just where you want to be.
Exactly. And let's talk about inventory. After going up for most of 2025, supply actually fell a bit in August, down 1.3% from July. It's still a lot higher than last year, but it's weird seeing the first monthly drop since January. If you're a seller who's on the fence, maybe you're thinking, prices aren't growing fast, rates are still high. Do I really want to list right now? And that hesitation, it just feeds the tightness in supply. August only had about 4.6 months of supply, which is tight by any historical standard.
Yeah, and it's keeping prices up. Even with sales slowing a touch, the median price for an existing home in August was $422,600. That's up 2% from last year. And get this, it's the 26th straight month we've seen prices climb year over year. That's wild. And homes are sitting a little longer on market too, 31 days on average now compared to 26 days a year ago. But as you pointed out, Lior, the selling pool hasn't flooded the market yet.
And let's not forget, the share of first-time buyers is still historically low, just 28%. They're getting squeezed by pretty much everything. Competition, prices, tighter financing. Here's my tip for potential sellers. If you're hesitating just because rates are high, maybe talk to a broker about creative buyer incentives. Sometimes, a little seller credit or rate buy down can make your listing pop even when the overall pool is smaller.
Love it. And for buyers out there who listened to our previous episodes, especially when we talked about timing and regional inventory, like in Miami or Austin, don't rule out markets just because they're not headline cities. Inventory moves fast, but sometimes the Midwest or even certain southern spots have that sweet spot of price and availability. It'll be interesting to see how stuff shifts if first-timers start coming back in, or if rates drop further.
Right. I mean, the outlook is balanced but cautious is probably the boring way to say it. But I think twists are coming as the economy settles out. Everyone's watching if supply or rates loosen enough to let more first-time buyers in before the year ends.
Well, that's a wrap for today's deep dive. Thanks for tuning in. If you've got questions about financing, don't forget you can reach out to Nadlan Capital Group. We'll be back soon to break down the next big shift. Lior, always a pleasure.
Thanks, Ruby. Always good chat. Take care, everyone. See you next episode.